Adjustable rates mortgages. What in the world is an adjustable rate mortgage, other than a mortgage that has a rate that adjusts every once in a while? Not much. That is pretty much what it is. But it is how the rate adjusts and when. The devil is in the details. A lot of you have probably seen adjustable rate mortgages or ARMs being referred to as a 3-1, 5-1, 7-1, or 10-1. Those are the most common terms. These terms are referring to how long the initial note is fixed and how often the rate adjusts for that fixed period. Additionally, an ARM can still be for a 30-year term. For instance, if you have a 5-1 ARM, you can see it on the screen. A 5-1 ARM has an initial note term that is fixed for 5 years, and after the 5 years, it adjusts once every 1 year. That is what the 1 symbolizes. Currently, we're seeing some different terms like a 3-6, 5-6, 7-6, and 10-6. This is the exact same thing, except the rate will change once every 6 months, which is what the 6 stands for. So over 30 years, you have a rate that is fixed for 3, 5, 7, or 10 years. After that initial term, it adjusts once every year or once every 6 months. Okay, it adjusts. But what does your rate adjust to and how much can it potentially adjust? The adjustable rate is calculated using 2 factors, a margin and an index. A margin is a fixed amount that never changes and that is set by the loan program. A vast majority of margins will be 2 1/4 or between 2 3/4 range. The index, however, is going to be based on one of the 2 indices that are used most often. You have the LIBOR or the London International Bank Offer Rate, or you have the SOFR, which is the Secured Overnight Financing Rate, which is now used more often these days. These can change on a daily basis. Let's use an example, say that the margin is 2.75% and the index SOFR is 0.75%, so that when the loan adjusts, you take that 2.75 plus the 0.75 and you have a new adjusted rate of 3.5%. Okay, final thing I'm going to go over, and that is the cap, which limits how much the rate can go up or down. Very uncommon to go down, but technically it can happen. The cap is 3 numbers separated by slashes. For instance, you can have a 525, a 225, and a 226. This is the first number represents how much up or down your rate will be adjusted the first adjustment. So if you have a 5-year ARM, then once that 5 years is up, if you have a 225, then it can go up 2% on the first adjustment. The second number represents the periodic cap, which represents the max amount the rate can go up or down in any additional adjustment. Finally, the last number represents the total amount the rate can adjust over the life of the 30-year loan. For instance, if you have a 225, then your rate cannot adjust to more than 5% over a 30-year term. And that is how the adjustable rate mortgage works. Contact me if you have any more questions on an ARM, and I can discuss it further with you.